Assalamu alaikum. Today we will discuss about the first chapter of accounting for second year commerce is incomplete records, which is also known as single entry system. As per the introduction of this chapter, we must know what are the different methods of bookkeeping. The first method that we can use is single entry system of bookkeeping, and the second is double entry system of bookkeeping. In this chapter, we will discuss about the first chapter, first style of bookkeeping, that one is single entry system. During the study, we have to know okay, what are the different methods of accounting. The first is cash basis method and the second is accrual basis method. As per the understanding of this chapter, we must know what is single entry system, and for that we must remember the definition of single entry system, which is the single entry system is an informal accounting or bookkeeping system where a user of the system makes only one aspect to enter a business financial transactions. After the definition of the single entry system, we must know normally this account used for or about the organizations who can use single entry system in which sole tradership in top, and then the business whose accounts records have been destroyed during the financial period, or the businesses who are not able to maintain his accounts. Further, business which lack of professional management, like they are unable to hire all those persons who have a professional degree in accountancy. They are unable to collect data as per the financial records. After that, we must know okay, why single entry system, or why these organizations who has a problem or who has a lack of professional accountants, why they use single entry system. Because the high cost of record keeping and lack of knowledge, time, lack of awareness for the need of financial records, and then balances of assets and liabilities accounts at start at end of the financial period. And the most important, it will covers all the information about inflow and outflow of cash during the financial period. Means all those organizations who are willing to use single entry system because they want to reduce the record keeping, because they are unable to hire a professional accountant because it's a time saving, and then there is no need of further for financial records. And the most important, the incoming of cash and the outgoing of cash during the financial period, it can be easily recorded in the single entry system. All those organizations who are using single entry system, they have a knowledge about the features of single entry system. That's why they are prefer to use a single entry system for record keeping. The first one is no fixed rules. According to this system is not guided by the fixed set of accounting rules for determining the account of profit and preparing the financial statement. The second is incomplete system. In this system, an incomplete system of accounting which does not record all the aspects of financial transaction of the business. The next is cash book, which is purely working. And as for the cash book, in this system, cash book maintained for the cash receipt and payment of the business organization during a given financial period. It means the record keeping regarding related to a cash receiving and payment against the expenses will be recorded. Then personal accounts in this system maintain the debtors and the creditors personal accounts for credit sales and purchase during the given financial period. All those organizations who are using single entry system, they have the information about the types of single entry system. As per the requirement, they are going to use different type of single entry system for their organizations. The first one is pure single entry system. In the system, dual aspects of each transaction is ignored. Only personal accounts or debtors and creditors are kept, but no record for real or nominal accounts. Then simple entry system. In this system, only prepare personal accounts and cash book accounts. And the third one is quasi single entry system. In this system, some other subsidiary books also manage with the personal account and the cash book. For preparing single entry system, net worth method is used. According to this method, the profit or loss made by the business is computed by comparing the net worth or capital of the business on two different dates. This system is also known as capital comparison method. For example, if the capital of the business at start was rupees 80,000 and it is rupees 90,000 at end, it can be said that the business has made profit of rupees 10,000 during the period. During the working of net worth method, there are certain adjustments in net worth method. The first adjustment is adjustment for drawing. When the proprietor withdraws some money from his business account for his personal use, it's known as drawing. In the absence of any such withdrawal, the capital at end of the accounting period would have been more by the amount of money withdrawn by him. So, the amount of drawing should be added back to the capital at end of the accounting period to find out his true capital on that date. Another adjustment in net worth method is adjustment for capital introduced, which is also known as additional capital or capital introduced. The proprietor introduced further capital in the business during the course of the accounting years. This will increase the capital of the proprietor at the end of the accounting year. It is therefore necessary to reduce the amount of capital by the amount of capital introduced by the proprietor during the year in order to ascertain the real increase in the capital of the proprietor on account of profit earned by him during the course of this accounting year. After all the adjustments, there are certain steps which can be used for the calculating of profit and loss. The first step we should know to find the value of capital at start. Step 2, find the value of capital at end. Step 3, add drawing in capital at end to find the adjusted capital. Step 4, add additional investment in capital at start. And step 5, working on expenses. After finalizing all these steps, bookkeeper may attention during the preparing a statement of affairs. First, find out the correct cash and the bank balance. Record correct stock through physical stock taking. You must know what is the actual physical stocks available. Then, value of assets should be ascertained from the vouchers and other sources. Depreciation on assets should be provided. Summarize the amount payable and receivable, sundry debtors and sundry creditors, and verify all the accounts of expenses and income outstanding and paid in advance.